A bride and groom have hopes and dreams for everlasting happiness. However, this doesn't prove to be the case for 40 to 50% of marriages. Not only are divorces difficult mentally and emotionally, but they can wreak havoc on the finances of both people. Assets need to be divided, alimony and child support must be determined, and the tax filing process will change. Choosing the appropriate filing status is critical and is determined by the date of divorce or legal separation became final. If the date is before December 31st of the year that's being filed, the IRS considers you to have not been married for the entire year. You're entitled to file as single or head of household. Dependents can only be claimed by both parents if they're married or not legally separated. If parents are legally divorced or separated, only the custodial parent may claim the children as dependents. IRA contribution deductions also feel the effect of a legal divorce. If you were legally separated or divorced by December 31st of the tax year that's being filed, you can only deduct contributions made to your own IRA. Health insurance coverage may also be affected by a divorce or legal separation. If you are losing your coverage through a divorce, other coverage must be obtained in order to avoid paying the penalty when you file your taxes. Check the online marketplace for pricing and details on a variety of healthcare plans to fit your needs. The profound mental and emotional consequences of a divorce or legal separation make it easy to miss the financial details that are affected in a divorce. This can feel overwhelming at first, but rest assured that it won't be overwhelming for long if you start early by gathering financial statements and keeping them in one place. Many people use a dedicated file folder or binder for this purpose. Include your basic income documents, as well as statements for your real estate properties, retirement, and investment accounts, cars, and other assets. Deductions before and after a divorce differ and can become complicated in many cases. Questions such as, is child support deductible, or do I need to report child support as income, are common as the first tax returns after a divorce come due. Many people wonder how to handle their taxes if they sell their house or one person buys the other person's interest in the home. These valid questions must be answered accurately in order to avoid worries with the IRS in the future. The IRS will exempt the first $500,000 of gains on the sale of your home if the filing status is married filing jointly. However, it will only exempt the first $250,000 if you're filing as single. The remainder of the money from the sale will be taxable. These rules apply to your primary residence, but may differ for second homes or investment properties. Hiring a credentialed tax professional to navigate this unfamiliar terrain is the best way to avoid costly mistakes and be sure that all deductions are maximized appropriately. During a particularly difficult divorce, the financial side of your split is often neglected in thought. But as the tax deadline approaches, the process will be easier through open, respectable lines of communication. Check out the personal taxes section of our website today for more information about how a divorce or legal separation affects your tax return preparation. Diligent tax preparation during and after a divorce will help to prevent any hiccups in your relationship with the IRS down the road. Take a look at our other resources for personal tax preparation information too. Thank you for watching.